Stocks and markets.
Earnings season continues over in the US. Quarter one results coming out, and we've got a couple of companies that we're going to talk about. But Ren, we've got to start with Apple. We've got to start with Apple.
So Apple announced a $110 billion US dollar, $110 billion US dollar buyback.
And for those that have just joined, what's a buyback?
So a company can buy back their own stock and essentially destroy that stock. And really simply, let's say Equity Mates is split up into 10 shares.
Yep.
Each share is worth 10% of the company. If we make a profit and we choose to buy back 2 of those shares, that means there's only 8 shares left, meaning each remaining share now has 12.5% of the company. So it's a way for companies to return money to shareholders, and in the US, it's a more tax-effective way than paying dividends. Because unlike in Australia, where we have franking credits, they do not.
Yeah.
So Apple has announced a $110 billion buyback. That is the record for the largest buyback ever.
Beating their previous record.
I was about to ask you that. Do you know, so Apple had the previous record. Do you
Yeah.
know what it was?
I think it was about 95.
No, 100 bill.
Oh, really?
Yeah.
Oh, there you go.
Now, $110 billion is hard to conceptualize.
Yes.
Now, before we talk about the buyback itself, let's understand what led to the buyback.
What led to it?
Well, like a good...
Sure,
tell us
sure.
about the good set of results is what I'm saying.
Okay, so they posted revenue of $90.75 billion for the quarter, and that is primarily broken down across their main product stream. So the iPhone delivered about $46 billion in revenue, Mac sales $7.5 billion, and iPads $5.6 billion. So majority coming there from the iPhones. Their services business delivered call it $24 billion in revenue, which was the biggest increase across all of their revenue streams, up 14% on last year. They delivered a $23 billion profit for the quarter.
For the quarter. Yeah.
Yes, absolutely swimming in cash. I think they have gross margins of almost 50%, so that's pretty incredible.
Yeah, well, I mean, that net margin is like 25, 26%.
Nuts. Yeah, so $23 billion profit for the quarter. So iPhone sales, though, were down 10% year on year. They put it to the fact that they haven't actually released a new iPhone in that period of time.
Isn't it also China?
Well, China sales were down 8%, I think. Yeah.
And Huawei is smoking them over there.
Yeah. Tim Cook said he's not concerned about the short-term impact of China. He's very much on the long-term. We're going to be all good.
Yeah.
But overall sales were down 4% across the company. So nonetheless, $23 billion in profit, Ren. What do you do with it? That's what leads to the $110 billion buyback.
Yeah. Are they also paying a dividend?
I'm actually not sure.
They do normally pay a
dividends,
dividend.
yeah.
So you pay a dividend and then you also do the world's largest buyback. Now, $110 billion US dollars is 166 billion Aussie dollars at the current exchange rate.
Okay.
And so I was wondering, how do I wrap my head around the size of this? So I've got 4 groups of companies, and as I go through it, just keep that $166 billion in mind.
Sure.
So my first group of companies, Australia's and Britain's supermarkets, collectively, $124 billion. So that's Woolies. These are all numbers in Aussie dollars. Woolies, 37 billion. Coles, 22 billion. Tesco, 40. Morrison's, 13. Sainsbury's, 12. That's their share market value. That's their market cap.
So 42 billion spare.
Yeah. So Apple could buy Australia and Britain's supermarket sector.
Wow.
And still have 40 billion to spare.
Wow.
So that's one. How about this grouping? Australia's software companies. WiseTech Global, REA Group, which is realestate.com, Car Group, which is car sales, Pro Medicus, Xero, Altium, Megaport, Audinate, and Webjet, 116 billion.
Wow.
So that's still 50 billion Aussie dollars short of what Apple is spending on this buyback. I've got 2 more. What about this? Basically all of listed legacy media. News Corp, Channel 9, 7 West, The New York Times, Warner Brothers Discovery, Paramount, Fox Corp, ARN Media, and Southern Cross Austereo. All of that legacy media.
Less than 100 bill.
No,
surely.
102 bill
Oh,
Aussie.
not far off.
Keep in mind, Apple is spending 166
So they could
bill.
do that when half of Britain and US and Australian supermarkets.
Yeah, they could do all that legacy media bucket
And scoop up Woolies supermarket.
and Woolies, and they couldn't quite squeeze Coles. They could get Woolies and a Sainsbury's, perhaps.
That's nuts.
Yeah, and then one final one just to complete this picture. All the smaller social media stocks with the dating apps thrown in. So we've got Reddit, Snapchat, Pinterest, Trump Media and Technology Group, Match Group, which owns like Hinge and Tinder and Match.com, and Bumble. All of those companies,
80 bill.
122 billion
Okay, that's
Aussie.
more than I thought.
But still, 166 billion.
Also, just think about all of those companies that you just went through and then compare that to the $1 trillion plus market caps
I know,
of
I
these
know.
companies.
Well-
Like it just these tech companies are just
Like you've got to just like pause, like go back to the supermarkets one. So those 5 supermarkets, like Woolworths alone would employ what, 150,000
I think
people?
close to 2, yeah.
Yeah, 200,000 people. Like collectively, those 5 supermarkets, they might be getting close to like 1 million people employed. And collectively, the efforts of those 1 million people and all the suppliers and all the contractors and everything that goes into that supply chain, collectively, that is valued at $124 billion.
It's crazy.
And Apple is doing a buyback that is worth more than that. Like the scale of these the scale of these tech companies is unfathomable.
Yeah. I mean, you're turning $23 billion profit a quarter.
A quarter. Yeah, I know.
Oh, anyway, huge results coming from Apple. Although the stock hasn't performed as well as some of its tech counterparts to kick off 2000.
Yeah, I mean, like the stock market is future facing, and investors would look at the results and say there are some questions about Apple.
Yeah.
But to be honest, like the iPhone sales are slowing story is literally a decade old.
I know. Every year.
And then they don't
New thing.
services has come through, and
I was at a party on the weekend and there was a product owner from Apple there. Previously worked on the Apple Watch and had previously worked on a bunch of other things. And he was saying how and of course he would say this, he works for the company, but version 5 or 6 of Apple Vision Pro, is going to be game changing.
Yeah.
He's just like lock and load.
Yeah, okay.
Be prepared. Anyway, Ren, a couple more that we wanted to touch on is Coinbase and Block. The reason for this, though, is because the effect of the rise in Bitcoin has really shone through in these results. So Coinbase is the major exchange in the US for buying cryptocurrencies. So they posted $1.64 billion in revenue for the quarter. They've got a net income of $1.18 billion.
How are those margins?
I don't know.
But I think there's a wrinkle hiding in that number.
There is a wrinkle.
Yeah.
Firstly, we'll just compare that to a loss same time last year of $78 million.
I reckon there's also a wrinkle in that number. The same wrinkle is in both numbers.
Yes. So what the impact of Bitcoin here is that the profit number includes a $650 million, what they call market-to-market gain in essentially the Bitcoin value.
Mark to market.
Sorry, mark-to-market.
Market to market, dust to
Yes.
dust. Yeah.
Mark-to-market crypto. So essentially what they're saying is the value of our crypto has gone up, and we're going to put this on. That is an accounting standard that they have to do.
Yeah. So
Yeah.
this is Warren Buffett's big gripe.
Yeah.
The GAAP accounting standards require companies to recognize movements in the fair value of their investment in their profit and loss number. And so in this case, it's crypto. For Buffett at Berkshire Hathaway, it's its stock market investments. But the movements in these markets affect their profit and loss.
Yeah.
Rather than their like operating earnings.
Yeah. So anyway, the stock's up 42% year to date. But the story continues to Block, previously known as Square. They made $5.96 billion in revenue for the quarter, driven a lot by their Cash app, which is growing, $1.2 billion in gross profit, 25% jump year on year, 57 million monthly active users. However, their Bitcoin again is driving a lot of this. $220 million was the value of their, was what they invested in Bitcoin. It's grown 160%, now worth just over $500 million at the end of the first quarter.
Wow.
Yeah.
Remember when we had Bitcoin on our balance sheet?
Yes.
Damn it.
I tried to find some info on what how Afterpay is going. As we know, Block
Yeah.
acquired Afterpay, but I think they're trying to hide that. I did read though, and this is not surprising, that it's sort of coming back a bit because now cost of living crisis, people are turning to that form of credit to buy, which is unfortunate. So buy now, pay later.
It's funny. I often think about the decisions made in 2021 and whether they regret it. So Meta changing its name to Meta, they probably regret that. And Block changing its name to Block and buying Afterpay. Like, they probably regret that.
$26 billion.
Yeah, anyway. All right, well, Bryce, let's take a quick break here. And then on the other side, let's talk about one more company that has reported its earnings and made a big song and dance about it, which is Berkshire Hathaway. So we'll talk about how they have gone in this year. And we'll share our highlights from the Woodstock for Capitalists, which is the Berkshire Hathaway annual general meeting. Welcome back to Equity Mates. We are talking all things earnings season. We have covered Apple's unbelievable buyback. We've talked about how crypto is buoying the fortunes of Coinbase and Block. Now we're going to talk about a company that is not investing in crypto, that one of the leaders of the company last year called crypto rat poison.
Yeah.
And that's Berkshire Hathaway. I guess to start this conversation, let's talk about Berkshire Hathaway, the company, and talk about how they've gone this year.
Yep.
And then let's talk about Berkshire Hathaway, the event, and what Buffett spoke about.
So they had a pretty strong quarter. They had $11.2 billion in operating earnings, which was up from $8 billion same time last year.
Now, and operating earnings is that same thing that we were talking about before the break, where that's the actual profit that the companies are generating, and that doesn't include the movement in share prices from their investments.
Yeah.
Yeah.
Commentary on their cash position. They hold a record $188 billion in cash. So think about the $166 billion buyback. Warren's got serious cash there to scoop up.
Well, no, that 166 is Aussie dollars. So the Apple's
True.
110 billion US dollar buyback, and then this is 188 billion. So again, it's like an order of magnitude higher.
Huge. They trimmed their stake in Apple. They are the largest shareholder in Apple, but they trimmed it by 13%.
Yeah, Apple was also like 40% of their investment portfolio.
Massive. Yeah. He's made such incredible returns on that.
There was a question that was basically, you let your winners run, Coca-Cola, American Express, you've literally held for decades and you haven't trimmed. Why are you trimming Apple?
I read that he suggested it's because he doesn't want a fat tax bill. Or it's something tax related.
But that logic also applies to his Coke investment.
Yeah.
I thought it was kind of weak.
Yeah. Anyway.
It must be that they're
Coke
concerned.
is an emotional investment for him. Anyway, strong set of results from Berkshire, but it was really driven at the core of it by a huge increase in the insurance business, the insurance underwriting. There was a gain of 185% in earnings from that business, up to almost $3 billion from about $1 billion the same year ago. So there's that $8 to $11 billion jump.
Yeah. Now Buffett over the weekend sat and took questions from investors. Wasn't with Charlie. He was joined by Greg Abel, who you were thoroughly unimpressed with last year.
Just so boring.
I don't think he did a lot to change your mind this year.
Yeah, definitely not.
So Greg Abel is going to take over the whole operating business, but Buffett also said this year he's also going to oversee the investments as well.
Yeah.
So Greg Abel is going to be the man.
Man.
But then on the insurance side, and insurance is Berkshire's superpower, Ajit Jain is going to continue to run that. And from what I saw of him, I thought it was pretty impressive. Yeah. So we've cut up this package of some of the highlights from the question and answer session. We cover why Berkshire sold Apple, Buffett's thoughts on AI. And it does make me laugh that we turn to a 94-year-old for his thoughts on AI. But he also answers questions on the amount of cash that they have, self-driving cars and what that will do to the insurance business, Paramount Global, a stock that Buffett lost a lot of money on, and a few other questions. And obviously, there's some thoughts on Charlie as well.
Yes.